With the easing of inflation pressures, Bank Indonesia is expected to begin cutting its key reference rate so that loans provided by banks will be more affordable for borrowers. However, the hawkish signal given by the United States Central Bank recently could delay Bank Indonesia's rate cut.
The Indonesian Central Bank, Bank Indonesia, will likely delay an interest rate cut at least until the year-end, as the United States Federal Reserve, or the Fed, has surprisingly showed a hawkish signal that it would raise its key rates twice more this year. Banking analysts have earlier estimated that the easing of the inflation pressure in the past few months will give the Indonesian Central Bank space to begin cutting its reference rate in August or September this year. The possible change in the U.S. Central Bank's rate direction may cause Bank Indonesia to wait for some more time to lower its rate cut. The Fed surprisingly indicated a hawkish signal following its decision to keep its key borrowing rate at the target range of 5 and 5.25% on June 14. Some members of the Federal Open Market Committee want another 2/4 percentage point moves before the end of the year. The Fed had raised its benchmark rate by a substantial 5 percentage points since March 2022. The fastest pace of increases in 40 years. Skipping a rate hike, the monthly meeting in June might have been the most effective way to unite a fractious policy-making committee. With the hawkish signal from the Fed, Bank Indonesia will likely continue to keep its reference rate at the current level. Bank Indonesia kept its 7-day reserve repurchase rate unchanged at 5.75% for a fifth consecutive month on June 22, 2023. The Indonesian Central Bank began to increase its key rate in August last year. Since then, Indonesia's annual inflation rate in June eased to 3.52%, settling into the central bank's target range for a second straight month. The headline inflation dropped to its lowest since April. Inflation in Southeast Asia's largest economy has gradually eased since peaking last September at 6%. The headline rate reached the upper end of Bank Indonesia's 2% to 4% target range earlier than expected in May and sparked speculation that Bank Indonesia might soon start easing policy rates. Indonesia's economic growth remains solid amidst the global economic slowdown. Data from the Statistics Indonesia, or BPS, shows that Indonesia's economic growth in the first quarter of 2023 was recorded at 5.03% year-on-year, slightly increasing compared to 5.01% in the same period last year. Bank Indonesia expects the economic growth in 2023 will remain strong at its upper limit of the 4.5 to 5.3% target range, driven by improving economic demand and rising exports. The Indonesian economy performed strongly in 2022, growing by 5.3%, driven by a recovery in domestic demand and solid export performance and amid high international commodity prices. In its latest report issued in June, the International Monetary Fund, or IMF, projects the Indonesian economy will moderate slightly to 5% this year and 5.1% next year, given tighter policy settings and the normalization of commodity prices. The agency's projection on Indonesia's economic growth is higher than the average global growth estimate of 2.8% this year and 2% in 2024. One of the key challenges which can disrupt the economic growth is the holding of general election in February 2024. If the elections run smoothly and the inflation continues to remain under control, there will be a brighter future for the country's economy.
Let's learn more now about how low can our BI rate go. The U.S. Federal Reserve, or the Fed, held its reference rate at the target range of 5% and 5.25% on June 14. The Fed will likely need to raise interest rates before the end of year, bring down to inflation. It is an honor to have with us on live Zoom today Bapak David Sumual, Chief Economist of Bank Central Asia. Pak Sumual will discuss with us about the impact of the U.S. interest rate policy on the Indonesian economy. Hello, Pak Sumual.
Hello, Luisa. Good morning.
Hi, it's good to have you with us on Economic Outlook today. Pak Sumual, the U.S. Federal Reserve or the Fed has indicated that it will have to raise its reference rate this month amid rising inflation pressures, and the hawkish signal has raised fears in the global financial market. Why is the U.S. interest rate so impactful of the world economy? Can you explain to us more on that?
Okay, Luisa. Actually, there are two reasons. Yeah, from macroeconomic perspective, an increase in U.S. policy rate is really important given its international role, yeah, of the U.S. dollar. So on trade, 50%, yeah, about 50% of invoicing done in the U.S. dollar. And also in terms of cross-border financing, about 90% of cross-border financing is in US dollar. So an increase in the US policy rate actually can have a significant impact, yeah, to trade, to the also to the cross-border financing. That's from the macroeconomic perspective, Luisa. But from financial view, changes to the US policy rate, or we call it the federal funds rate, also dictate the yield of US Treasury securities. So if there is a higher of Fed rate, the risk-free asset also will offer higher return, and also it will affect the other financial asset. So other banking assets like deposit loans also will be affected, yeah, by the increase of the federal funds rate. So US dollar until now is very important role in the global trade and investment. So that's why any changes in the Fed rate also will affect other financial assets. So we can also see in the share of the US dollar in the global forex reserves until now is very significant. Even though in the past 10 years we see a downward trend, but still very significant. The latest data I saw right now, 58% of the forex reserve until now is still in the US dollar.
Now, Pak Sumual, with the Fed planning to increase their rates, how is this going to impact on Indonesia, especially on Bank Indonesia's interest rate policy? Can you elaborate more on this?
Okay, certainly a further increase in the federal fund rate, of course, it will narrow the spread between the Bank Indonesia and the Fed's real policy rate. Yeah, the real policy spread right now actually around 50 basis points, very thin compared to January 23, still around 250 basis points. So of course it will somewhat discourage, yeah, foreign capital inflows into the domestic bonds market, and it can further pressure the IDR to depreciate. Yeah, but right now we see that the Indonesian bonds risk profile is quite encouraging. Right now the CDS or credit default swap very low. Right now around 83 compared to around 140 last year, the same month last year. So it signals the appreciations of market, yeah, the market players to the Indonesia's government bonds. Yeah, so actually the sentiment of the government bonds players in the market is quite buoyant right now.
Well, Indonesia's inflation rate at the moment is still within BI's target range of around 2 and also 4%. With this situation, actually, Pak Sumual, do you think that Indonesia will be able to cut its interest rate even if the Fed goes ahead with its interest rate hike?
Yeah, the inflation is actually declining in the past few months, and it's also within our forecast actually. Yeah. So we forecast for this year by end of December 23, we forecasted that the inflation will be around 2 to 2.5%. And also we see the rupiah is quite stable, and it may encourage Bank Indonesia to contemplate cutting the policy rate. Especially we see the threat of domestic consumption in the past few months. We see declining also in the domestic consumption, as seen in the retail sales index, for example. However, in my opinion, it may be very wise for the central bank to wait for the Fed before doing so, because we see that we can consider the narrowing margin between the Fed and real policy rate between Indonesia and our main trading partner, especially US. Yeah, so I think the heavy lifting should be provided by the government right now, because the government right now has an ample of liquidity. Until now, we see that the budget still in a surplus situation till May. So I think the government can give more push, yeah, to the economy. Right now, until May, we see there is about 802 trillion to be exact, yeah, that can be disbursed by the government to stimulate the economy.
Sumual, at the moment, BI's reference rate is 5.75%, and commercial banks have set their lending rates of between 8% and also 11% this month. Do you think that these current lending rates are still too expensive for the business sector?
Yeah, actually, there is no major changes in the lending rates. Yeah, even though the central bank keeps increasing the policy rate. Yeah, the lending rates offered by national banks in 2023 actually remain well below the pandemic average. Yeah. For example, for the working capital loans right now, around 8.8%. We see the latest data in April, compared to 9.7% in 2019 average. Yeah, so before the pandemic. So still below the pre-pandemic level. And actually, many business players, they still have plenty of liquidity within their company. Yeah, so according to the Bank Indonesia survey, around 57% of business choose to fund their operation using the retained earnings rather than borrowing. So that's, of course, perhaps there is a wait and see, and perhaps they are more prudent. Rather than borrowing, they still use using their retained earnings. Yeah. So I think if they see opportunity in months ahead, there's possibility they will increase their borrowing. Yeah. So we still maintain around 10 to 12% lending growth in 2023 for the time being.
So you're saying that the companies are still being somewhat cautious at the moment. Now, let's talk about economic forecasts now. Regarding the country's economic growth, IMF and also the World Bank still estimate that the economic growth to moderate about 5.03% and 4.9% respectively. Now, is there any possibility that this growth rate will exceed 5% this year?
Yeah, last year actually we recorded a very high, comparably, from previous years, quite high, around 5.3%. So the growth primarily driven by a strong aggregate demand due to the what we call it revenge consumptions after the pandemic, and supernormal trade gains because we have higher commodity prices last year. So right now we experiencing a a normalizing of commodity prices, and also we don't see any revenge spending anymore. Yeah, so kind of a low base effect right now we see in a high base effect in 2023. And considering this development, it may be hard, I think, to replicate last year's performance. And of course, there is some stimulus we need, yeah. So perhaps expansionary fiscal policy, I think, will provide some boost, yeah, to the economy, Indonesia's economy, beyond 5% this year.
Right. Now, Pak Sumual, as we all know that Indonesia will hold our legislative and also presidential elections in the coming February 2024. Do you think the election will affect the economy? And so how much will it affect the economy?
From the historical perspective, in my opinion, the upcoming election cycle actually should translate positively to Indonesia's growth prospects. Yeah, if we're looking at the historical data, in our calculation, election-related spending by the government and also non-profit organizations may provide around 0.15 to 0.2% additional growth to the GDP in 2023 and 2024. We may see also higher money velocity during quarters in elections, end of this year and also beginning of next year. And some sectors like advertising, for example, media, logistic, food and beverage, may experience also higher growth in elections years. And according to the historic data, we see that corporate revenues actually we see often recorded above trend growth, yeah, during the election year. And election years also have no significant impact on capital expenditure, yeah, from historical data from the 4 direct elections that we have since 2004. So it will not reduce investment, especially after we see a clear prospects, and also there is no
Like no surprises?
nothing that investment that will affect the economy.
Alrighty then, so we are looking for a positive outlook for the year ahead. Bapak David Sumual, Chief Economist of Bank Central Asia, thank you so much for sharing your insights on BI rates forecast. Thank you.